What's up, pioneers and crypto enthusiasts? Welcome back to Zacchy Crypto Update, your go-to channel for no-nonsense, straight-to-the-point crypto analysis. If you're here to understand the real deal behind market movements and get ahead of the curve, you're in the right place. Today we're diving deep into a topic that's been making a lot of noise and, frankly, raising a lot of red flags: Picoin. Now, for those of you holding Picoin or even just watching its journey, listen up. A popular crypto analyst, Dr. Altcoin, is sounding a very serious alarm. He's warning that Picoin, which currently trades around 68 cents, could crash to as low as 40 cents by August. That's a potential 40% drop from today's levels. Why is this warning so urgent? And why is an analyst who was once a Pi enthusiast now one of its biggest critics? It all boils down to a critical lack of transparency and some very concerning insider activity. Picoin has already tumbled a staggering 60% from its peak in May. Dr. Altcoin points directly to two major issues: zero transparency from the Picore team, that's the founders, Nicholas Kokalis and Chengdiao Fan, and what appear to be significant insider sales. Think about it. Dr. Altcoin, who has over 46,000 followers on X and was initially a strong supporter of Pi Network, has completely flipped. He's now demanding the Picore team and the Pi Foundation be upfront about their token sales. His exact words on this? No investor wants to put money into something where the founders refuse to be transparent, and he's absolutely right. This isn't just about general market sentiment, it's about fundamental trust. When a project's core team isn't transparent about its own token distribution and sales, it immediately raises huge red flags for any serious investor. It creates an environment of uncertainty and suspicion, and that's a direct hit to investor confidence. Beyond transparency, there's an even bigger structural issue that has analysts deeply concerned: centralization. The Pi Foundation reportedly holds over 90 billion Pi tokens across more than 2,000 wallets. Let that sink in for a moment. 90 billion tokens. Why is this a problem? In the world of decentralized cryptocurrencies, such immense centralization contradicts the very ethos of blockchain. It creates what we call a single point of failure. Imagine if hackers gained unauthorized access to these centralized wallets. The entire value of Pi could be wiped out in an instant. This isn't just theoretical, it's a very real and present danger for highly centralized projects. And this centralization explains a crucial point why top-tier exchanges like Binance and Coinbase, despite Pi Network's massive user base, are yet to list Picoin. These exchanges have rigorous due diligence processes. They scrutinize projects for decentralization, transparency, and liquidity before listing. Pi's highly centralized token distribution is a glaring red flag for them, making a listing incredibly difficult, if not impossible, in its current state. Without listings on major exchanges, real price discovery and liquidity for Picoin are severely hampered, but the risks don't stop there. We also have a fundamental supply and demand imbalance brewing. Millions of Pi tokens are being unlocked each month, significantly increasing the circulating supply. We're talking about 272 million coins unlocked in June alone, and a staggering 1.53 billion coins over the next 12 months. Now, in any market, when supply rapidly increases and demand doesn't keep pace, what happens? Prices tend to go down. This isn't rocket science, it's basic economics. We're already seeing signs of this. Data shows the supply of Pi on exchanges is trending upwards. In the last 24 hours alone, the supply on exchanges increased by over 3 million. This suggests that investors, particularly early holders, are looking to offload their tokens as they become unlocked. Let's switch gears and look at the technicals because the charts are telling a very clear story here. If we zoom in on the 8-hour chart, you can see Picoin surged earlier this month, hitting $1.66. This was on the back of anticipation for the Pi Network Ventures launch. There was a lot of hype, a lot of speculation that this would finally lead to a major exchange listing from the likes of Binance, Coinbase, or Upbit. However, as we now know, those expectations fell far short. The actual launch, while it included a $100 million ecosystem fund, didn't deliver on the big exchange listing many hoped for. And what happened? A massive reversal. Picoin has crashed below its 50-period moving average, a critical indicator showing that bears are firmly in control. It has now dropped to a key support level at 66 cents, which was its lowest point on May 17th. This is a crucial line in the sand. If Picoin breaks below this 66-cent support, it opens the floodgates for further downside. The next major target, and potentially the all-time low, is 40 cents. That's where Dr. Altcoin's prediction comes into play. marking a potential 40% drop from current levels. For any kind of bullish reversal, we'd need to see Picoin climb back above the double bottom neckline at 86 cents. Until then, the technical picture looks bleak. So, what's the takeaway from all of this? Picoin faces a multitude of challenges. The lack of transparency from the core team, the significant centralization of tokens, the ongoing token unlocks creating selling pressure, and a bearish technical outlook all contribute to a very concerning picture. While the Pi network boasts a huge user base, that community enthusiasm hasn't translated into fundamental strength for the token itself. For Picoin to gain real traction and overcome these hurdles, we need to see genuine transparency, a clear path to decentralization, and robust utility that justifies its supply. Until then, extreme caution is advised. I want to hear from you. What are your thoughts on Picoin? Are you holding it? Have you seen the impact of these issues firsthand? Let me know in the comments below. Your insights are super valuable to this community. If you found this analysis helpful, please smash that like button. Subscribe to Zacchy Crypto Update for more in-depth insights, and hit the notification bell so you don't miss our next video. I am not a financial advisor. The information provided in this video is for educational and informational purposes only and does not constitute financial advice. Cryptocurrency investments are highly volatile and inherently risky. You could lose some or all of your investment. Always do your own research, DYOR, and consult with a qualified financial professional before making any investment decisions. Thanks for tuning in to Zacchy Crypto Update. Stay safe out there, stay informed, and I'll catch you in the next one.